and now it's time to get your portfolio queries answered. I have Shweta Rajani with me who will be focusing on viewer queries. Shweta, let's begin and let's take Shrikant's question first. He says that he's 43 years old and he's been investing in real estate for past 15 years, and now his net worth has gone to almost 4 crores with no active loan. So congratulations there, Shrikant. And now he started investing in mutual funds. The goal is to, accumulate corpus for his 13-year-old son's education, 1 CR in next 4 to 5 years. For retirement, he plans to retire at 50, and he's aiming to build a corpus for that purpose as well. SIP of 30,000 and 5,000 each, I think he's allocating to these funds. UTI Nifty 50 Index, SBI Nifty Next 50, UTI Nifty 200 Momentum, Bandhan Nifty Alpha 50, Tata Nifty Mid Cap 150, JM Flexi Cap, all passives for some reason. I wish I had him on the phone call, to discuss more on this strategy. But then he wanted to review his fund mix and also if there is a better fund allocation that you might want to recommend. And he's also looking at lump sum investment, 30 lakhs in mutual funds. So, all right, so that's Shrikant's question for you. And retirement he's talking about in next 7 years. He's 43 now.
Yes. So Shrikant, while you've put a number target for your child's education, the corpus that you would want to reach, you've not stated a particular amount for your retirement, but I'm going to take it as 1 CR year as well. So just two things on your goal. 30 lakhs of lump sum, if you can scale it up to 50 lakhs, and the 30,000 of SIP that you're doing, either scale it up to 60,000 of an SIP, or if you can do a 25% step up every year, you'll be able to accumulate around 2 CR or 2 crores at the end of 7 years, which should meet your requirement of child's education as well as the retirement goal that you have. Coming to the portfolio, yes, all passives. Now, let me give you one data point here that historically, if you see, and I'm talking about longer time periods, 65 to 70% of the actively managed funds beat their own index, and the range of outperformance has been, if I have to average it out, anywhere between 2 to 5% per annum. In some cases, it could also be more than that. Therefore, my suggestion to you would be to not invest into passives. You have a 7-year horizon, which is, a decent time frame to be in the active and get that compounding benefit of active funds. So some schemes that I suggest you to stop your SIP, UTI Nifty 50 Index, to Nifty 200 Momentum, Bandhan Nifty Alpha 50 Index, and the Tata Mid Cap 150 Momentum Index. While you have passives, you also have a theme-based passive or momentum fund, which again needs for you to understand the cyclicality of that index and exit at the right time. So this again is something which you may not be able to do. So I'm suggesting you to stop your SIPs. What you can add to your portfolio instead, a DSP Equity Opportunities Fund, ICICI Pru Focus, SBI Contra, Quant Active, and a Kotak Emerging Fund, so that you get a good balance of large mid in your portfolio as well as the benefit of active management.
All right, so the funds recommended are DSP Equity Opportunity, ICICI Pru Focused Equity, SBI Contra, Quant Active, and Kotak Emerging Equity. Okay, looking at 7 years time frame for his retirement, do you really you also want to recommend him a strategy to start exiting from his retirement gold investments or funds?
Absolutely. So, the best way to plan your retirement is when you are reaching your retirement. 1 year before you reach your retirement, a portion of the money that you may need for the next 1-2 years, I would say, 2 years, can be moved out from equity and shifted into debt. Let me put this in numbers for clarity. Let's assume you're going to require 50,000 every month as your living expenses once you retire, which basically means you're going to need 12 lakhs for the next 2 years. From your equity portion of the portfolio, redeem 12 lakhs and park it in debt. It will ensure that you are peaceful at night. If you see market volatilities for the next 2 years, your living expenses are taken care of, and what you need is only put in debt. The rest of the money is continuing to compound for you at a higher growth rate. So that's one strategy that you should adopt. And whatever is in debt, start your plan for your systematic withdrawal plan. So that first of every month, that much amount is hitting into your bank account, and keep following this on every 2 year cycle. That's one strategy that you should adopt, and it works well.
All right, let's move on. Let's take Bharat's question. And he's 47 years old and expecting 20 crores corpus for his retirement. Investment horizon is 20 plus years. You've got the funds that he's invested in, planning to exit from PGIM and Axis Mutual Fund. So he's got Axis Mid Cap and Axis Small Cap, and PGIM Mid Cap. And so the money he wants to exit from PGIM and Axis Mutual Fund, he wants to invest in Quant, Motilal Mid Cap and Tata Small Cap.
Yes. So Bharat, first thing again on your goal, if you can step up your SIP by 15 to 20%, you will comfortably get to your 20 crore corpus that you are targeting for retirement. But you will need to step up of at least 15%. Coming to the schemes, the two schemes you've chosen to stop your SIP, the PGIM Mid Cap and Axis Mid Cap, I second that. You should stop your SIPs here. But rather than going into a second mid cap fund, I would suggest you to go in for multi-cap kind of fund. So what you can add over here is instead a Kotak multi-cap, a Canara Robeco multi-cap to your portfolio. Also, you have sector funds. So you have, ICICI Pru Technology Fund, and you also have a Motilal Nasdaq 100 ETF. Now, when you invest in these funds, here again, it's very important that you're understanding the sector, you understand the cyclicality of the sector, and you are entering and exiting at the right time, which may not be possible, for you to do if you're not monitoring it 24/7 like a fund manager. So therefore, stop these two SIPs as well. And instead of these, what you can add a Quant large cap fund if you want something from Quant, as well as a DSP equity opportunities fund to your portfolio. So that will ensure you have a good blend of different market caps, different fund manager styles being added to your portfolio.
Okay, let's take Rajiv's questions. And he has 1 lakh to invest every month for a period of next 12 months, and he wants a return of 12 to 15 CAGR, and time horizon is 5 years, 5 to 7 years, and he is confused because of high PE ratio of mid cap and small cap index. So how should we go about it?
Sure. So you have a decent or medium-term time frame that you're sitting on, and therefore, if you're doing equity investing, looking at the historical track record and also how we are looking at the economy moving going forward, I think a 12-13% return expectation from equity is a fair expectation to have. Of course, there'll be periods of volatility in between. You just have to maintain your discipline of staying invested, and you should get to the return range that you're hoping. The worry that you have on the mid and the small cap valuations. See, now this is I have to highlight that when you're talking about mid cap, you're talking about 150 companies in the universe. When you're talking about small cap, you're talking about 250 at least in that universe. You could have something which is sitting at a 15 PE. You'll have a company which is also sitting at 100 plus PE, and that's where we suggest. In the mid small cap space, rather than doing your own stock picking, it's better to rely on a fund manager who's good at doing this job for you. And they'd ensure that there is a good blend of growth and value strategies in the portfolio. So as well as you don't put 100% of your corpus in mid small, but having a 60 large, 40 mid small allocation in the portfolio is also a good combination to have. So that's what I'm going to suggest to you in a portfolio right now. The schemes that you can go in for: SBI large and mid cap fund, a Quant large cap fund, an Invesco small cap fund, HDFC flexi cap fund, and Canara Robeco multi cap fund. So equally invest in these funds and build your portfolio.
All right, and with that, it's time up on the show. Shweta, thank you so much for taking time out and helping our viewers with their portfolio queries. And once again, a very happy Holi to you. And for all our viewers, before I sign off, I'm going to leave you with our WhatsApp number and email ID. And once again, wish you all a very happy Holi. Thank you so much for watching. Goodbye.